NIO's shareholder meeting is officially over. Every revolution passed, and the biggest development was what did not happen. There was no surprise announcement, no sudden strategy change, and no new problem that could derail the company's recovery. That may sound boring, but it puts NIO stock in a very interesting position, because the meeting is no longer the story. The real story is that NIO now has only a few days left to deliver one of its strongest months ever, and the result could decide whether the stock finally builds momentum or gets trapped near the same levels again. Shareholders approved all the resolutions presented at the annual meeting, including the re-election of an independent director and the appointment of the company's auditors. This was a clean, routine result that gives NIO stability but does not change the investment case by itself. There was no major new strategy, no surprise capital raise, and no unexpected leadership change. For the stock, that is neutral to slightly positive. It removes the risk of a negative surprise, but it does not create the kind of excitement that usually sends shares sharply higher. Investors are already looking past the meeting, because what happens next will matter far more than anything shareholders voted on today. And this is where the pressure starts building. NIO officially guided for between 110,000 and 115,000 deliveries in the second quarter. The company delivered 29,356 vehicles in April and then jumped to 37,705 in May. That gives NIO 67,061 deliveries through the first 2 months of the quarter. To reach the bottom of its guidance, the company now needs 42,939 vehicles in June. To reach the top, it needs 47,939. In other words, NIO must deliver its strongest month of the quarter by a wide margin, and anything close to the upper end would send a very powerful message about the strength of its new product cycle. The reason this target is still possible is that May did not include a complete month of NIO's newest vehicles. The Anvo L80 launched on May 15th and deliveries began on May 16th, meaning the model contributed for only about half the month. June is the first full delivery month for the L80, and that could make a huge difference. Anvo already delivered 12,029 vehicles in May, up sharply from April, despite the L80 arriving halfway through the month. If demand holds and production scales smoothly, the L80 could become the model that pushes NIO over the lower end of its second quarter target. The ES9 adds another layer to that possibility. NIO launched the flagship SUV on May 27th and started deliveries 1 day later, so it barely contributed to the May total. June gives the ES9 its first full month on the market as well. That means NIO is not trying to reach its second quarter target with the same lineup it had in April. It now has a full month of the L80, a full month of the ES9, continued demand for the core NIO brand, and additional volume from Firefly. This is the first time investors will see whether the three-brand strategy can create serious scale at the same time. That three-brand strategy is becoming the most important part of NIO's growth story. In May, the premium NIO brand delivered 20,013 vehicles, Anvo delivered 12,029, and Firefly added 5,663. The company is no longer depending on a single premium lineup to carry the entire business. NIO protects the higher-end brand and stronger pricing, Anvo targets the much larger family SUV market, and Firefly gives the company a way to reach younger buyers and more affordable segments. If all three brands can grow without stealing too many customers from each other, NIO could finally achieve the scale investors have been waiting for. But the June result must do more than look impressive on a headline. The market will compare it directly with management's guidance. A result around 43,000 would allow NIO to reach the lower end and protect management's credibility. A result closer to 46,000 or 48,000 would be much more powerful because it would suggest the new models are accelerating faster than expected. But if June comes in around 40,000, that would still represent strong growth from May while leaving NIO below its own target. The market could punish that result, not because 40,000 vehicles would be weak, but because expectations have already moved higher. That is the tension surrounding NIO stock right now. The company's recent financial results show that stronger deliveries can finally arrive with improving margins, but investors still want proof that the improvement can continue. One strong quarter is encouraging. Consistent execution is what changes a stock's long-term direction. June deliveries will reveal whether NIO is entering a sustained growth phase or whether the recent momentum was helped mainly by new model excitement that could fade after the first launch wave. There is also a much bigger question hiding behind the delivery number. Can Anvo become a real growth engine without weakening the premium NIO brand? Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. It's the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. That is what investors will start judging once the full June breakdown arrives. If the L80 grows quickly while the main NIO brand remains near or above 20,000 monthly deliveries, the company may have found a way to expand its customer base without sacrificing the premium side of the business. If Anvo rises mainly because customers are moving away from more expensive NIO vehicles, the total number could look good while the financial benefit becomes less impressive. The shareholder meeting offered no dramatic surprise, but that may actually help keep attention where it belongs. Management now has no new announcements to hide behind, and no unexpected corporate event to distract investors. The next major update will be about execution. Did the L80 produce a real volume surge? Did the ES9 add meaningful demand? Did Firefly continue growing? And most importantly, did NIO deliver enough vehicles to keep its second quarter promise? So, will stronger deliveries push NIO stock higher? If the company reaches the upper half of its guidance and shows balanced growth across all three brands, the answer could be yes. That would give investors evidence that NIO's new product cycle is working and that the company can turn a quiet shareholder meeting into a strong operational finish. But if deliveries miss the target, the stock may remain stuck as the market waits for another month of proof. The meeting is finished, every resolution passed. There was no major surprise, and that makes the result slightly positive but not powerful enough to move the stock on its own. The real catalyst is now June. NIO needs between 42,939 and 47,939 deliveries to land inside its second quarter guidance. And for the first time, it will have a full month of the Anvo L80 and ES9 helping it get there. If those models deliver the acceleration management promised, the shareholder meeting will quickly be forgotten and the delivery numbers could become the update that finally changes the direction of NIO stock. This is it for this video, guys. Thanks for watching and please make sure to subscribe, like and leave a comment down below.